warm welcome to everybody. I am Shrija Agrawal, and welcome to yet another episode of the Hard Thing About Hard Launches, the startup podcast. It's a very interesting conversation today, and one which I'm so looking forward to because we have two entrepreneurs catering to the financial services space and different aspects of investing. One has a product, albeit a savings and a fixed income product, and he's trying to revolutionize that marketplace. And I also have with me another entrepreneur from Bangalore who is very, very focused on stock markets investing. Let's understand from both these entrepreneurs why have they taken these niches or why have they sort of really selected carefully these suites for themselves? How big is the market opportunity? What is the competition landscape? And really, what is the future of fintech in this country? Just given so much of regulatory intervention. So, what really is happening in the minds of fintech entrepreneur? Trivesh and Akshar, welcome to sort of this podcast. A very, very interesting conversation from the way we started off the record, our conversations before the podcast. I would sort of like to begin with you, Trivesh, and very interesting point that you mentioned that Shrija, we have been 10 years in our journey and not really have had the need or the compulsion to raise external capital
Yeah.
at a time where there's so much startup romanticism happening and there's so much of investor and startup relationship coming into the mainstream. There's also some bit of romanticism building on bootstrap startups.
Yeah.
Zicoda is really hailed as the big winner. uh, but there are two schools of thought to it. That is it really a win-win strategy in the long run, or should you really raise money to sort of uh, create the category? I
Yeah.
want to understand, and let's sort of delve deeper into your business model. First question to you: what exactly has basically helped you in your journey in the last 10 years that there was no compulsion for you to raise external capital?
Yeah. Thank you, Shrija. It's an honor to be on the podcast, and I'm absolutely looking forward to this conversation with Akshar and yourself. And there's a lot to learn always. And with Akshar coming with his entire background of fixed instruments and fixed savings, it will be a great mix of saying how this space of stock markets and the fixed income product go hand in hand, and have actually built a mass of wealth for the entire nation. So that will be an interesting conversation that we have. Coming back to the question, Sirija, I think Tradejini as a business has been bootstrapped for, I think, three reasons. One, the focus on tech from day one was given priority, saying if you build good products, customers will come. So when customer comes, you don't need to spend on your customer acquisition cost, which predominantly is the main reason why today companies are raising money, is because they want to get and onboard more and more customers at a accelerated pace, and to ensure that these customers don't go to your competitors while staying with you. And that's one of the reasons why typically companies and even our competitors have raised money. We didn't have to do that because 10 11 years back when we started, this entire concept, like you said, romanticism of startups and the lure of raising funds was not that high. So at that time, the prominence continued to remain on saying how can you build profitable businesses for a long term. It was never for the next 2 years, next 3 years, next 5 years. It was just saying next 20 years, what are you doing? And that was the mindset that the company started with. So the two founders, Kishore and Dinesh, who started the company, also had similar thought process, saying how do we build something that is going to last for the next couple of generations, and how do we ensure that this business of ours doesn't die in case there is a bad year as well. And that was, I think, a phenomenal decision back then, saying that how do we make sure that the business is self sufficient. So what we did very well was, back in the day, back in 2012 when we started, the concept of discount broking itself was not prevalent. We were among the first few to start this concept of discount broking, and people used to come to us saying, in 20 rupees, what is the business you guys can do? There is no way you will be able to earn money. There is no way you can get profitable, and this is not sustainable. 20 rupees may today you don't get a liter of milk. So what, how are you building an entire business on 20 rupees? Luckily at that time the wisdom was high enough to say that with volumes this 20 will be sufficient. And over the years we have realized that it's finally a game of volumes, and luckily for us, the markets have matured over the years. The business has continuously seen phenomenal growth year on year. And I think that has really kept us above the ground level of water always, to ensure that we never had to sink in, get into the coffers a little more, go out, ask for money from people. And that, I think, has been the forte for the business per se. But like you also said, there are today the fantasy and liking for bootstrap companies is also a lot higher, and that's a very good sign, very honestly, because that brings in the concept of saying how frugal you are as a founder. Because as a founder, you need to be frugal. You need to make sure that whether it's your money or an external money, you need to spend it wisely, and that is now picking up steam.
Thanks for that, Trivesh. Yeah. So, Akshar, I'll come to you now, and Trivesh, I'll get back to you on frugality, on what really are the conflicting thoughts and opinions of VCs on that, also the market competition. But also, let's hear from Akshar. Akshar, it sounds very fascinating that you have really, really chosen your sweet spot, fixed deposits or saving. Did you really begin as a product like this in your journey? Because a lot of startup founders get into various iterations before you establish product market fit. What really was the thinking and the idea behind pursuing fixed market? Why that? You must have done some research, or you thought that the other spaces of the market investing have been taken by, say, a Zerodha and the likes. So it is perhaps better for you to stick to a niche.
Oh, thanks, Shrija, and I'm equally excited to be part of this podcast with Trivesh and you. You're right. I think I spent about almost about 6 years with Kotak, learning about investments, learning about banking, learning about client management, and I realized that in the market, it is best if you create a vertical expertise and go deep into it, then keeping multiple horizontal expertise whenever you are starting out. And what we were seeing in market as trend is that people associate expertise with a brand and with a platform when they've worked in it for years, gone deep in it, and solved for it. Right? Like how Trivesh has solved for equity broking since so many years. It has really taken them time, and then you win the customer's trust with your product. I think same for Zerodha. It has taken them inflection points to get that customer trust, and that's because they've had an unwavered focus on the segment that they have picked up for the customer. What we identified early in January of 2023 is that while there has been a good focus on equities, and it is almost invariable that they should be picked up in the long run for larger economy participation, but so much on the fixed income side, so much on very traditional asset sides of banking, people are still doing what they've done since the last 2 decades. That is going to the bank, doing their banking with the bank, doing their deposits just with their own bank. We felt that there is a limitation when it comes to customers having access to traditional asset classes that they understand and they trust, but have access to beyond their own bank. If I am with HDFC, I think I can do everything with HDFC, and I don't know what other banks are offering. And so we picked up this as a case that, and when we studied the data, Shija, we understood that while equity today for retail investors is about 20 to 25 lakh crore of total participation of retail investors, just bank fixed deposits are at a staggering 110 lakh crores. It's 6 times more in volume, perhaps 5 to 6 times more in customer participation also. And we identified that with a large market like this, there is still access that is only limited to your own bank. If I am with HDFC or Kotak, I'll say I will do my banking and deposits and savings with HDFC. If I am with, say, ICICI, I will do it with them. So we thought that there, for a very simple product like deposit, that the customer understands, that Indians understand, they prefer this as their investment vehicle. Can we give them access to various deposits across banks and NBFCs, wherein they can access it digitally and without having to open a savings account? So we did a lot of research, understood that the friction of the customer is they don't want to open a new savings account. They don't want to visit a new bank branch. So how we could do it was the question with the banks and NBFCs as our key tie-ups, that if we can create a system where we can open a FD without having to open a savings account and still open it across multiple banks and NBFCs, then the customer would be very happy to prefer one with a higher interest rate, or perhaps a better tenure wherever they are getting. And that's how this came into inception. We started off with a small 2 NBFC, and now we are with about 7 NBFCs and banks offering their deposits to more than 20,000.
Thanks for that, Akshar. So basically, you got lucky in terms of. Thanks for that, Akshar. So basically, you got lucky. Usually, startup founders are not that lucky to identify a niche and sort of go deep down on that. You said you have done some research and also the Kotak experience helped. Now, I want to understand this that when one talks about the education about investor awareness in the market, and just given the kind of havoc inflation is playing right now, FD is being construed as a product not necessarily for the young. I know the traditional mindset really is that, okay, invest into FD and the remaining, because India has a very, very high savings mindset. And then you have this entire campaign, which is mutual fund sahi hai, where the compounding effects will benefit or kick in, right? So I see, in a way, what Trivesh is doing and what you are doing is antithesis to each other. Like, really, right? One is enticing people to get into more and more equity markets and saying that, listen, invest for long term, 10 years, 20 years, 15 years. If you are 20 years old right now, after 15 years, you will get the benefits of compounding. And you, on the other hand, are saying that, listen, let's be a little conservative. And I'm giving you a platform, a marketplace to get you the best FD product. From a startup entrepreneur perspective, it can come across being like a great opportunity, right? Yeah. Because you identified that niche. But in the long run, I wanted to understand that just in terms of the market opportunity size, do you think the equity markets is a space which is becoming more and more saturated now? There's Grow, which is doing pretty well. There is Zerodha, which is doing well. And there's Tradejini. So it was better for you to take the other route.
Not really. So let me break this down into two, three things, right? I think you asked two, three things. Maybe the last one I'm picking first, that is it a saturated market for equity? And I think Trivesh will better answer this, but definitely not. I think we are just about 5 to 6% of our population actively trading in equities. And then also, as I said, right, 20 lakh crores in equity, 110 lakh crores just lying in bank fixed deposits. So is there headroom for bank fixed deposits to grow or equity to grow? Definitely for equity to grow, right? Like, so, and there is space. So I don't think that it is saturated. Plus the financial literacy as well as the savings rate of Indians is just increasing now. That will mean that there is more participation across investment asset classes, and more financial awareness means the customer really wants to manage their portfolio well. So it's tailwind this industry of investment rather than saying it's equity versus fixed income. That is point one. Point two is you said younger generation want to come into equity and that it should be better, and while the older generation is into deposits, and should this be when people are coming out of deposits? We have this thesis, and we understand that people don't hate any instrument. People hate the outcome that come from it. Like, for example, people don't hate FDs. Now, if people don't prefer FDs, they don't prefer low returns. So the question is, if your deposits also give you high return, you'd prefer it. You'd start preferring that. Of course, you would do your risk return analysis, but after that, you would say that I don't hate FDs, I hate low returns. So wherever I will be getting lower returns, I will not want. What we are solving for is exactly to say that, hey, you don't need to necessarily go back to your own bank, which is giving perhaps the lowest rate of interest. You can look for a safer investment option across the different banks and NBFCs. Look for it and do a deposit over there. Banks today are giving it with an assurance of RBI that they are insured up to 5 lakhs by RBI, and you are still able to get a higher return rate of interest if you go and scan the market properly using platforms like us. So that is the first part, that we are not, and in fact, on one side, we are not investment advisors. Neither are we investment. We are any RIA or we recommend investment. Our goal is to tell the investor that if you have decided to do an FD, now come here and select a better one. If 110 lakh crore is already lying in bank fixed deposits, our job is to tell 10% of that volume to say that, hey, now you've decided to do something on the bank fixed deposit. Why don't you look for a better option that can give you a higher return? And the last part is, I think you asked about whether it is, again, equity versus fixed income. I think both have a very different role. and both are required in the portfolio of a smart investor. Today, I feel if there is a smart investor, they will look at their risk appetite, they will look at their goals and align them. Many use cases come which go beyond just the normal wealth creation. Most of our actual FD book users are between 30 to 35. Now, one wonders why 30 to 35 would be doing an FD. They should plan for long term and keep money in something that compounds at 12% or 15%. But their reasons and their goals are very different. People want to save up for a house, and down payment of their house in the next 1 or 2 years, they cannot risk that in the equity market. So a large proportion of people who want to deploy money to buy their own house want to put it in a fixed deposit as they are saving up, so that in the next 1 or 2 years, whenever they require to buy it, they have it available. So many different use cases and goals come in, which make the customer and the investor choose a particular asset class or a mix of asset classes in their portfolio.
Akshar, there are two, three different things that we're talking about here. Okay, so the debt versus equity argument is a failed one. I personally feel that because you can't really win this argument because there are many proponents. There are many proponents who will tell you that equities in the long term is a sheer winner, and there is so much data and analysis to sort of establish that. The second, what you said, that there are still pockets of investors who are choosing FD because the motivations are different, like you outlined. It could be saving up for a house, saving up for a marriage, and yes, there is a market opportunity for that. Because in any portfolio, there'll be 10% which will anyways be going in FD. If there's 50% going in markets, and the remaining, if you have very smart people who are sort of who want to take risk, they can look at Bitcoin or things like that, right? So there's definitely a market opportunity for all these instruments. But the point is exactly what I'm trying to tell you, that the wisdom at large,
Yeah.
and especially if this conversation were to happen, say outside Bombay Stock Exchange, they'll be like, "What are we even talking?" And this,
Yeah.
I'm just trying to tell you, right? This entire
Yeah.
debt versus equity argument, because and what you have done smartly, I must give it to you, entrepreneurial smarts, is that you are saying, boss, I am not taking any risk of advising you debt versus equity. You have already taken that decision to invest in debt. I am just offering you a marketplace on which debt product to choose. So from an entrepreneurial smartness point, maybe you are there, but from a financial literacy and the financial awareness point of the debt versus equity, I think we have to establish that it's a failed argument now. Because if I were to give you an example for my own self,
Yeah.
and whatever paltry little money I've have saved as a journalist, people in my own bank will now say ki why FD. The bank themselves are saying why FD because you will get less return if you sort of factor in the inflation, right?
Yeah.
But yes, there are people in your house. There is mindset. There is motivation. There are different sort of risk appreciation sort of metrics for different people, and accordingly they choose their financial instruments. I want to come to you now, Trivesh. I think I have clearly now understood where Akshar is coming in as a model. So basically, it is not necessarily targeted at retailers per se, as much it is a B2B product really targeted for banking system. So he has taken that niche, and we will sort of know more about his business model. But understanding more from you, Trivesh, as somebody who's observed the private markets for about 14 years and really, really been talking about startups, like so many startup interviews that have happened, the one name which keeps coming back and again as a complete winner for this decade has been Zerodha. Outstanding as to what they have done. Their worst critiques will vouch for what the brothers have done. And then there was a company called Grow which came in, right? And came in and like, how? Is this a winner's take all market? In the edtech space, it was really said that, okay, the category is for number one, the number two player, no matter how big the market is. Because ultimately, what you are solving for is a very consumer facing product,
Yeah.
right? I mean, lot of money goes into brand building. I mean, to Akshar's point, it's actually a huge cash burning machine. You have been able to do it for 10 years. Bootstrapping, that's another thing. But if you have to come to think of it, I mean, establishing a brand, and especially a consumer brand, basically means a lot of money being burned there. So I want
Yeah.
to understand from you, that is this really a winner takes all market?
Sirja, the dynamics of the market are pretty simple. Today, like Akshar also said, it's about 5 to 6% penetration. That is official numbers. The actual numbers are even far lower because there are multiple PANs being used to create demat accounts. So the numbers are all on the higher side with the exchanges, etc. Actual penetration in the market is close to a crore and a half people. So you were saying at a 140 crore total population, you have about a crore of people or 2 crore of people who are investing into the market. Typically in the US, this number is close to about 50%. In the Europe, it is about 30%. In India, even on a very safe bet, if I say it is 5%, you're looking at 6 times of growth from here for us to go into the category of saying we are close to a developing nation. Okay. And now with what India currently is, with the 5 trillion mindset that we have, the economy, the GDP of the economy and the market cap in stock markets typically go 1:1, which means that if your GDP of the country is at $3 trillion, the market cap, total free float market cap in the stock market is also close to the $3 trillion number. So it is a very simple math if you have to look at it, saying if you have to go to 5 trillion, the markets also have to go to 5 trillion. For the markets to go to 5 trillion, there are two ways. One, the current companies have a fantastic rally for the next 2 years, or participation in the market is a lot more, where the income, the money that comes into the market is a lot more. If the money that is coming into the market is a lot more, you need a lot more players to take care of that money. Today, no matter the competition, like you said, there are a lot of people who are catering to the same set of people. And for us as brokers, typically now Tradejini or anybody else, we are looking at the same set of people, same set of traders, same set of investors, and trying to woo them, saying that this is better or that is better, or and you're trying to get those customer base. So finally, it comes down to the point, Sirija, saying how can you make your product speak for yourself? Because the brand building activity is a never ending thing. You can spend a crore on it, you can spend 100 crores on it, and you can spend 1,000 crores on it. Where does the buck stop? And that decision is always the tougher one. So what is in your control is building something which is phenomenal, which people will automatically get attracted to. And I think that has been the reason why we have not spent a rupee on marketing for the last 11 years. To say that we will spend everything on the tech, because the tech is finally that is going to be consumer facing. It is not going to be Trivesh or Tradejini, etc. It's going to be the product that is in the mobile phones of the user. And how easy it is for that user to use that is finally going to get us more and more people.
No, but Trivesh, I'll tell you one thing. All of you sound very similar. If I talk to you, if I talk to Grow, and because the credibility is there, that
Yeah.
Shrija, we have a great product,
Yes.
our product speaks for itself. So, what really is the difference? And I would also like to sort of get Akshar's views on this also. I mean, he spent so much time in Kotak. I mean, are we saying that the financial services market, the investment market is so underpenetrated in the country that if I have a reasonable product, it can do well in this
I
market? Are we saying that?
I have absolutely no doubts about that, Shrija, because today, like I said, the fantasy of raising money, spending hugely on a customer acquisition has taken forefront, but should not have taken forefront. But otherwise, for a conventional business, if you have a great product, because of the sheer size of the market that is underpenetrated, there is absolutely no way that you would not be able to build a sizable business out of it. Yes, there are a couple of other challenges. One, today the bigger one is on how do you handle compliances, because the compliance is taking a huge toll on everybody. It is the exchanges, it is the regulators, it's the government. Everybody is now trying to ensure that nothing goes wrong, because we as brokers are dealing with the hard earned money of our consumers, and it's such a big responsibility for us, saying if something goes wrong, everybody is put at risk. So for us, you asked us saying what is it that is different now. Typically between competition also, what differentiates us is three things, I would say. One is the entire utility of the app and the speed of the app. You build for something that is going to be fast, that is going to be smooth, and that's going to help the trader. Now the trader is paying you brokerage to say that your platform should be running properly, it should do what it's supposed to do, and do what I need to do. If I'm going to run a strategy, the platform is supposed to help me run that strategy. I should not be dependent on saying that the platform is going to be down on certain major days, or the platform not going to work, etc. If you're doing that, then we're not doing our responsibility correctly. The second is that how important is the role of customer support. People tend to ignore this, Shrija, saying that when a consumer is facing a problem, because it's finally a tech company, a tech company can break. There is absolutely no one who can claim that a tech company can have an 100% uptime, because there are so many touch points that we as a broker have to deal with, that if something breaks somewhere, we are going to be down. But the point is, when it is down, if a consumer can reach out to our customer support, will there be a human at the other end to find and help find a solution? And that, I think, over the last 10 years has been our strongest forte, saying if a customer is facing an issue, they can just pick up the phone, talk to the customer care. And a lot of times when it is an important issue, I am on calls with customers saying, what can be done, what is it that you're going through, and how can we help you? I think these two factors, one on the app itself, saying how quick, how robust, and how utility driven the app is, and two on the side of how customer support friendly your organization is, I think are the main differentiators that we've had amongst the entire crowded space that we deal in, and why we have kept ourselves in that particular niche where customers continue to keep coming back to us and not typically leave us once they've joined us.
Okay, so I want to sort of pick up further on this aspect. I've been to different companies, different spokespersons will talk about their USPs very passionately. She, I have this, I have that. So I will sort of leave that because for the customers and their validation. Taking
Yep.
it further on that interesting point that, okay, if there's a reasonable product, there's no doubt that will do well, just given the market penetration is not there. Akshar, is it a comparison drawn to the fact that, okay, in this country we need as many banks? There's an HDFC bank, there's a federal bank, there's a Kotak, there's an ICICI bank. So are we saying for Trivesh and Akshar that in the next 10 years we need 50 zerodhas, we need 100 crores? Are we saying that? I mean, so is that the room for more and more fintech entrepreneurs to come in and to target this market opportunity? So there is no winner takes all game there. It's not like number one, number two. Are we saying that?
So in financial services, most financial services, in fact, I concede that it's not a winner all takes market because the customer segment is very heterogeneous. What Shrija wants from her investment app is very different than what I would want, what Trivesh would want. Somebody is really looking at the customer support and being happy that there is a person out there who's helping, and somebody really wants the smoothness, and there is a Gen Z that's really wanting the animation to come through in the transition of the app to make sure that they feel cool about it. So heterogeneous mix of customers and new customers coming in mean there is room for everybody to move. Whether we will have 50 zerodhas or 100 zerodhas, that I don't know. But I know that there is room for large to get larger and also new entrants to come in and get larger. So I completely agree with what Trivesh is saying. One is it's a general rule that you look at any growing market. If the market is growing at 15-20%, new entrants will take on the share over here and will get an opportunity to come in. It's not a saturated market. And the second is that if the customer segments within that ecosystem are different, then somebody will, like, for example, just giving where Trivesh comes from, there is an app which is called Dhan that has told itself that I am only for the super active traders, right? Only no investment person. I don't want a normal SIP person. I don't want that person who just wants a delivery. I am out there for the guy who's wanting to keep this as a business. Then there is likes of Grow that says, hey, I manage your whole wealth. Maybe you also have an SIP, I will do it. So everybody is targeting, everybody is getting a different share of customer, and all of them are surviving, co-making the ecosystem.
So Trivesh, so what your point is that there'll be different niches, there'll be different sweet spots in the same market. People will take.
Exactly, Shrija. There is, unfortunately, the entirety of the customer base cannot want for one single thing. The entirety of the customer base will want for something that they like. And if the company is able to build for that, and I think that's where it is very important, where you listen to your customers saying what do they need, build for that. And like Akshar, I think is the classic example of that. He heard what the customers need, saying that I don't mind an FD, but get me a better return. So how do you build for that? There are, so it is very easy to say that the banks could have just built a portal where everyone puts in all of their information together, and there is nothing. The consumer just comes, looks at it. But who actually was able to do that in the last 50 years of, say, even just the banking? After the core banking has come, even after that, nobody really was able to build for that problem. And that's where I think companies today will continue to build features and products that are important basis the feedback that they receive, and being active in the market, listening to your customer, saying what do they need and what do you as a company or as a brand can build on top of that. to make his or her life easy is finally what will continue to let you grow in the market. There is not going to be a situation where there is one, two, three, or five companies that will take over the market, especially in fintech, because of how deep rooted our a value system on finance is. From the basic panchayat system to all the way to the national government, everyone will talk finance, everyone will want to talk about making more money, everyone will talk about how can I invest and save more. And with all of that coming into mainstream today, and with how there are more and more tier 2 tier 3 companies slowly upgrading themselves to an upper stage, saying that a tier 3 is becoming a tier 2, a tier 2 is becoming a tier 1, a tier 1 is trying to become a metro. And that upskilling on a city level, I'm saying that upskilling is such a great thing for the country, because that for us as businesses and as fintechs just helps us grow the market, help us in more penetration, help us in getting the product accessible to a larger crowd.
A very interesting conversation thus far, trying to understand about dynamics of the market. Very, very meaningful. Let's talk about some numbers. Both of you have been praising about your platform, customer validation, getting the market insights, market opportunity, but the devil lies in the details. Okay. So Trivesh, give me the revenue, the cash burn. You said that there's no burn according to you. So basically you've been profitable. So give me a sense and I'll come to you, Akshar. Yeah.
We have a total client base of about 40,000, of which about 8 to 10,000 people are active on the platform at a given point of time. We are growing at a percentage of 50% year on year in terms of our top line. We have an EBITDA margin of close to 30% with a PAT margin of close to 15%. This is after all our spends on tech that we continuously do, on upgrading our infrastructure, on building better server capabilities, on building better tech capabilities, and ensuring that all our customers are kept within the scope of our operations and not letting anyone go through. So with all of that, I think we've done this over the last 11 years, and growing continuously for 11 years at that pace is not easy. And in a market that is crowded, in a market where funds accessibility to funds was a lot easier in the last 5 years, keeping yourself relevant, keeping yourself accessible and still growing, I think that's where we've outshined most of the other peers.
But how big is that number? You have given me the EBITDA margin, the percentages, but give me the number, the revenue number.
So we are at close to about 25 crores in terms of our top line, and all the numbers below that follow.
Okay. What about you, Akshar?
I think fantastic, Trivesh. It's great to know. I mean that you've run it across the years as successful bootstrap plus profitable company. For us, we've just started, so we are a year-old company now. We've launched our product only 3 months back, so it's early days for us on revenue. We are losing money right now. However, if I look at it in one way, we are building the product out right now. Integration with banks take up time and take up effort and energy as well. Each bank takes up about 5 to 6 months for them to integrate with us, and therefore this is the time that we are building products out. So it's been just about a quarter, so revenue numbers is too early today. We may say that we are trying to now achieve our product market fit. And while, Shija, you've said we've praised our platforms, but at least on my end, I can say that we have not achieved our product market fit yet. We will look to achieve our product market fit in the coming months and see and scale partnerships. Having said that, in the last 3 odd months, we've crossed about 50 CR of AUM. For us, AUM is a metric, assets under management. So the transacted volume that we have done is crossed over 50 CR. We are now coming to a run rate of about a crore a day, 1 crore of transacted volume a day, but still we will have to reach that volume of at least maybe about 5 times this in the next 1 year.
No, these are very good numbers. I think you are sort of completely inching towards product market fit. If you have 1 crore as an AUM transaction every day, that means there's enough kind of credibility established in the market. So I think you are in the right direction.
Thanks, Shija. What we do is, and just to kind of throw that highlight on the business model, we also come from the fact that we don't want to burn money on customer acquisition. So what we have done is we've built out the digital infrastructure for it, so that we can empower any B2C platform to launch FDs without having to them connect with the banks. So we can help them launch in 1 week across banks and NBFCs that we have tied up with and made a platform. Just for an example, if Tradejini tomorrow decides their customers are also looking for other investment options like fixed deposits, they would not have to build this out completely with multiple NBFCs and banks. If they come to us for an integration, we can white label a solution for them, integrate it within their app within a span of 1 week, and they can focus on the customer. They can focus on getting the revenue from it. And even the revenue that we make, we then share it with our B2C platforms. So our first few B2C platforms in this quarter have started going live. Apps like KPaisa, apps like SimplyFin, Get Yield, Z is also previously one code. So we are now focusing on getting multiple B2C platforms. Large brokers of the countries as well are now talking to us. Our idea is they should go live with the infrastructure that we have created with the banks and NBFCs, and we will look to continue doing it across many other banking products, like how we have done for deposits.
Akshay, this will be the winning product for you. This integration with other third party platforms and revenue sharing, I think the white label product that you are building, this will be the ultimate winner for you. Now, I want to understand your revenue model much more clearly. So, there are two parts to your business. One is the retail, other is a white label product. Okay. So, I'm a person, retail consumer, coming onto your platform. Will you also charge me or you're not charging me?
We do not charge. So exactly as you said, we have those two business lines, but within those two business lines also, B2C is not our focus business line. Even if you look at our website, you will see a small invest now function where, of course, some people who know us organically will know, who follow us on LinkedIn, come transact also. But we do not spend to acquire customers at all on the B2C side. Our main focus is on getting large partners on the B2B2C side. Now, having said that, when you come as a customer on our B2C platform, use our app, use our interface and book an FD, we do not charge you anything. We do not also, you get the same interest rate that you would be getting if you would directly go take a cab and go to the bank's branch or go to their website. So you as a customer are getting empowered that I am getting the same interest rate and a seamless execution without having to compromise on my convenience. On the other hand, what we earn is we earn a spread on the AUM that we transact with our banks and NBFCs. So our banks and NBFCs pay us a certain commission depending on the popularity of the bank, depending on the volume that we are moving with them, and we accumulate that. On the B2C side, of course, we keep the whole margin. On the B2B2C side, we have a revenue sharing agreement with the B2C partner as well, depending on the volumes that they are moving for us.
Akshay, you are building the Shopify for FD. Let's just
That is right.
yeah, you're building the Shopify for FD, and your revenue model will essentially be this integration interface. And I think I'm very convinced after this podcast, Trivesh and you are going to have a conversation on how to integrate Fixerra on Tradejini.
There's no two ways about it, Srija. Absolutely no two ways, because it's such a good thing, and the entire point of how you can democratize the fintech. This is a classic example saying
Exactly.
how do you get the investor to take a risky bet on the stock market, but also help the same app help in a building a fixed asset and a saving mechanism. And that's where I think there's absolutely no doubt that an integration is definitely on the cards.
So I should get my intermediation fee then.
Without a doubt.
Okay. So Akshay, I also want to understand more about your investors. 1 year old, and how have you managed to raise money from this credible set of people? I mean, tell me. Give me some sense. I mean, how was the meeting like? And ultimately, if I look at a Shopify, I mean, great product as to what they have built for e-commerce. So you're B2B essentially. So what is the end game? You sell to a Kotak in the near future or something like that? So some big bank will buy your seriously. I mean, come on, let's talk the reality. Maybe a former employer can buy you out 5 years down the line. And it could be very possible given the kind of investors you have gotten on board, by the way.
So actually, it's just been a year, so I'm getting into the business rather than thinking about getting out of the business. But very
As a businessman, you would never think that, saying
yeah,
that how do you want to exit? You don't
yeah,
want to. Why would you?
don't want to. In fact, it's very true, right? Like, I mean, I still get this question a lot, Shrija, from outside that, that in the near future, what do you, I mean, typically you don't want to even exit. You don't want to see the possibility of exit. You want to retain control as much as possible, though you are open to strategic thinking about how this can lead to more investors accessing your investors as an end customers, accessing your product, getting your line. So that's a different thing. But let me tell you, I would have loved to keep it as bootstrapped as possible. And there is definite romanticism about it. And I think it is in the right sense because frugality is understood when it is your money. I genuinely believe that even if I have raised investor money, frugality आपके पैसों को आप जैसे ट्रीट करते हो ना, आप दूसरों के पैसों को वैसे ट्रीट नहीं कर पाते. ये रियलिटी है. फिर भी आप ये truth है.
But actually, I must tell you, but then you have raised money from a very closed cohort of people who
Yeah.
are such big sort of personalities in the financial services space. Because,
Yeah.
and I must tell you from my experience that just 2 years down the line, you'll feel this pressure. Because look at the people. There's Shailesh Haribhakti, then there is Jaideep Hansraj, there's Shivang and Kotak Private, and all these people. The basically the cohort is so close knit. It's a Bombay mafia, the banking mafia from which you have raised money. So there will be a natural compulsion after 2 or 3 years. So I think as a young entrepreneur, you have to start thinking through about this also. And maybe if you're so clear in your head on how you have to build it out, then keep it on your head that okay, and communicate that to your investors then.
Not true. That's of course there are learnings. It's a newer territory for me as in this as well. But what I understand is most of the investors we have got understand what we are trying to build. I think that is very important. Rather than them seeking the 5x or 10x क्या है, they understand what we are trying to build. That is the bigger validation. And they understand that this is a challenging task in its own self. But there are other reasons of why you would also want to raise a fund when it is particularly banking tech industry that we come from. Then I have to work with a bank or an NBFC. As I said, it takes 5 to 6 months to onboard that bank and NBFC, even if there is absolute high intent on their behalf because of how compliance works, because of how tech works with a bank. Generally, banks want to work with someone that they can perceive our medium to long run will be there. So, in the perception of a bank and NBFC, we want to be there. And of course, it helps as a validation that we are there in this, we have raised a fund, we are there in this for the medium to long run. And then therefore, that they can back on us, work with us so that we can provide their services to multiple other fintechs. So, this is also not just to say that there is a lot of cost and we need to raise funds to manage all this cost, but it is to give confidence to the ecosystem back that they can collaborate with us. We are there in it for the medium term. Good quality investors are on our cap table, and therefore they get a little more conviction to work with us. It's still early days, so we want to work with the larger banks as well. Perhaps this helps us in that case.
No, I think a white label product where you're getting deep relationship with banks on board, because in this country, the biggest validation is if you're getting banking partners on your platform. That is the biggest ask of every fintech. And I've seen this from very close quarters. No matter how advanced you are in your fintech cycle, everybody wants a credible banking partner on board. And we have seen this with the unraveling of Paytm, right? I mean, the lessons in front of us. Actually, just give me a sense of your burn rate. I mean, how big is it?
It's early days again, Shija. I'll be honest, I'll not be able to comment on it right now.
Okay.
Uh,
Okay.
Once I think we do our first year of, we will complete our first financial year in March. Only then we will have a better sense of a stable. I'll be comfortable then.
So how many people now? How many people big now? Company? 10 people?
We are a 13-member team now,
Okay.
largely tech and product, and a few in business, including me. We focus on, like how Trivesh was saying, right? We focus on building out the product, building out the integration, and then the business team is a small team that focuses on convincing and not convincing, but rather partnerships team that builds alliances with the B2Cs to tell them that if at all they want to launch this, there is an integration that they can go forward with it very easy, simple, and in low bandwidth that they have to put the B2C have to.
So I think in the fintech space, if I have to look at it, it's very interesting that there is a Fixerra, there's a Tradejini, and the other segment of the market where I see a lot of activity happening and a lot of interest from players is the entire EMI space or the affordability space or this entire new scam of basically zero cost EMI, right? I mean, it's basically the entire credit card culture, which basically has become a very fancy name, the zero cost EMI. There are a lot of companies targeting sort of the same segment. But if you talk to all of them, they all become very happy that this particular banking partner is on board. So it is still a market where bank is the ultimate winner, right? So this entire so much talk about the banking sector being disrupted, or the neo banking or digital banking, it still remains in this country that your very solidified institution, the revered banking, is not going to go away anytime soon. In fact, that thinking just becomes more and more solidified. What do you think, Trivesh? What is your sense that with this entire revolute of the West coming to India, but I don't think our bank is going out anyway. The app cannot be the bank, really.
It cannot be, Shrija, because finally the pillar of the entire economy is your banking sector. If by chance there is even a small shakeup in that, you have a catastrophic event where the entire economy could face a lot of problems. But what is important is that these banks are willing to partner with other vendors to build layers on top of themselves, which may be contrary to themselves, which may be a little more expensive for them, but they're still willing to do it because they realize that the entire consumption story of the country is so large now that if they don't do this quickly, they're going to lose out. And between banks also, they know that they have to do this. Earlier there was this entire concept of DSAs where there used to be direct selling agents. They used to pitch for your product, go to the houses, tell them that these are the products of the banks, you can do this. And today, with all of the fintechs, with the exchanges also and the regulators also being very active, this is a very important thing which we tend to forget, is how active RBI and SEBI also is in promoting tech, in saying that we will build sandbox environments for you. You can test out what you're doing. You can look at how we can help you in building greater financial products. Use our own services, whether of UPI, NPCI, etc., DigiLocker, and Aadhaar based verification. These are things which have actually come from the government. It's not any private player. These are things which the government has really pushed for, and the adoption by even the age old banks, the new age banks, and all of these to finally come into this new culture of neobank, microfinancing, margin based funding, securities lending. All of these are just layers which have been built on top of the actual banking function, which is take deposits or take savings and give out loans. Within these two functions, the number of layers that have been built, and these have been built a lot by the private players. And that is the phenomenal part of this country, where not a lot of countries are seeing this kind of revolution, where you're able to build fintech products on an existing age old banking system, where, like Akshar said, it can take 6 to 9 months for integration, even if it's a plug and play solution. Even if it is plug and play, you will need 6 to 9 months, because compliance needs to be taken care, documentation needs to be done, tech integration from both the sides have to be up to date, and those things take time. No matter how robust your platform is, it takes time. But still, given all of that, I think today it is phenomenal on the banking side also. And you also mentioned about EMIs and credit cards. I think Gen Z's love credit cards. This is become so popular, one because of obviously how rewards they've started this entire I don't know what is it. It's another game in itself, saying that how these rewards work, how you can utilize these rewards, how you can cross use these rewards, and that has actually really interested all the Gen Zs. And I think most of us, including myself, all of us hold at least 2 or 3 different credit cards with different banks to see what can be utilized best at the best time. And I don't think that is a bad thing for the economy. I'm not the right person to comment on the zero EMI, because I don't know predominantly how these things function. But on the credit card side, I definitely know that it is great for the country. And as brokers also, we are also looking at how we can utilize this credit cards to allow clients to do the pay in payout. As of now, we are not allowed to, but we are also looking at this potentially, saying in the coming years this is going to be the way of life. And how do you build for that? If there is something that can be revolutionized, is something that obviously you're always thinking as a businessman.
Akshar, I must say that very interesting product, Fixerra. Like really, I think both Trivesh and I are convinced that you're on the right path with this conversation. And you are like doing the grunt work, right? Dealing with banks, compliance issues, and then integration. What really are your concerns? What keeps you awake in the night, right? I mean, because ultimately the fintech space and very big companies are now kind of unraveling. And I know for the fact a lot of companies have an embargo on them from the RBI to take on new partners. So suddenly the fintech space has also have alarm bells ringing from an entrepreneur perspective. Give me your 2 or 3 concerns from an execution perspective. One, of course, getting the banking partner on board, and the second is the grunt work. Yeah.
No, absolutely. Sometimes I tell my team we are more of a compliance company than even a tech company, because the level of compliances that we do on a daily basis just to be able to integrate and work with a bank takes a huge toll on a small team like ours. There is a large team, there is an MNC, maybe perhaps it's fine, but when it's a smaller team, some ways it's easier because you are just starting out, you can put those practices right away. But some ways also it takes up a huge bandwidth of your team. If you ask me what is the challenge or what keeps me awake, I think there is I think Trivesh would also know about it, but in FinTech community, there is always a joke between founders that what are FinTech founders most worried about, right? It's that product market fit nahi aayega, ya team nahi banegi, ya funding nahi aayega. And the last option is कि RBI का एक circular Friday evening को आएगा. Always the last one that so it's always like that. And particularly in this industry, banking as a service, what we do is typically called open banking or banking as a service. Regulations over here have come into the in the lending side of it. DLG, you would have heard of digital lending guidelines coming. But when it comes to a bank's borrowing, there are no guidelines such yet. So this is an evolving thing that will come in. Of course, what we do today is think of it that what the regulator will want to protect in the future, customer data, alliances. We build it out in a way. But sure, there is this industry that is looking to evolve. Regulators will come in, will put across compliances. So I mentally prepare myself and my team that we have to always keep a lookout that this will have a certain regulation, which we will at a point of time have to adhere to, and how flexibly can we do that?
Yeah,
Yeah,
I think, yeah.
like
Yeah.
how India is for Akshar, SEBI is for us.
Yeah.
I know.
The number of compliances that we have seen in the last 2 years, Shirija and Akshar, we have not seen in the last 20 years of business. I think we've had circulars, 5, 10, 15 circulars a month, sometimes even more. You're getting circulars every other day, and all of these circulars are 5, 10, 20, 40, 50 pages long. And the important part is these circulars are effective in a couple of days later or maybe a week later. So you need to go through that circular, understand that circular, figure out what you need to do, because if you're a tech based broker, everything has to be tech driven. So you have to upskill on your tech, make sure that the tech is running in conjunction with the compliance, and to make sure these are talking to each other properly in 2 3 5 days is a challenge, is a task we are running every single day. And like you said, if it comes on a Friday night, all the best. There's nothing left to do. Weekend, not just for you, but your tech team also is screwed, saying just do it because we need to go live with it on Monday. So these are things, but sometimes these are fun because you've not seen this kind of pace and hustle from the regulator ever. The regulators have typically been okay. There's nothing broken, so I don't need to fix anything. But
Yeah.
now the regulator is saying something is going to break, which I need to fix today, which is sometimes good, but sometimes not apt. But sometimes it definitely works in the favor, saying that you're preempting some things and working for it today.
Such a heart to heart conversation between two founders. They can all feel for each other, one from the RBI perspective, other from the SEBI perspective. And we are now getting towards the end of the conversation, but no conversation in the tech space can now be complete without the mention of the new buzzword, which is, as you might have guessed, artificial intelligence.
Yeah.
Does AI really have a role to play in your lives as yet? Or how aloof you are from AI, especially in the tech product side?
Akshar, you want to start?
Yeah, I can go for it.
Yeah, sure.
So our focus currently, so let me first say that in the current stack that we have not built a suitable use case with AI as of now. In fact, I think of it that I have not got a use case yet where I want to use AI effectively to solve a particular problem. However, this doesn't mean that banking does not have any, AI does not have any role in open banking. There is a huge role that AI can play. But in the current technology that we are building, how we are building, it is more about security and emphasis on securing and keeping that data safe, keeping that transaction safe, rather than worrying about the artificial intelligence as of the product that we are building. However, very soon we are picking up multiple other banking products, which we will again white label in this same solution of building infrastructure for it with the banks and then giving it to B2C fintechs and consumer techs. Within that, we definitely see a good role that AI can play in open banking platforms, which will empower the customer to select what they want to do eventually and why which product they should go for. So we have identified those use cases, but as of now, we don't use it in our current technology stack.
What about you, Trivesh?
Interesting. For us, actually, Sirija, we have three currently deployed use cases of artificial intelligence. One is on our customer support side, saying how can you get more queries resolved quicker using artificial intelligence. Because how this works is, today the requirement, because I also mentioned saying we have just one head office, we are a team of close to about 100 people here based out of Bangalore, and we built a very lean team to manage that entire business. So with this team, you still have to cater to somebody who knows only Malayalam, who knows only Telugu, who knows only Tamil. But with this, the artificial intelligence helps, because there are a lot of these platforms who help you converse with the customer through a bot in their vernacular language, answering the preliminary first set of questions, which are the general questions, saying what is the brokerage charge, how much time does it take to open a demat account, what is it, the margin that is required, etc. The preliminary questions are now getting answered through a voice bot, which sounds like actually a human in the native language, the vernacular language of the consumer. Even after that, whatever questions that the customer still has can still go to the live agent and talk to a live agent. But the first response is helping our customer base to work that much more effectively on answering the more important ones, the more difficult ones where an AI cannot help. So the first use case is on the customer support side. The second use case is on the entire research and analytics bit, saying because we are a broker today, there are a lot of analytics that we run on our platform, saying what is the customer doing on his entire dashboard, how many number of trades that he's taken, which have been profitable off of that, which have not been profitable, what was the strategy that he had deployed. And bringing all of this into a nice dashboard is something that today AI is doing on our behalf, saying that it is understanding what a trader is doing, how much money he is lost today, how much money he's put into the his demat account, and what is it that can be done better. So the entire pretext of Tradejini today is to say making finance more available, saying that how do you make finance more available, more informed decisions that need to be taken. And as part of that, how can you bring in more of these AI solutions for us? Because finally, if you have to remain profitable, we have to build efficiencies in the business. And AI for us is definitely working well in terms of how efficiently our customer support, our research function in terms of analyzing huge data, AI is able to do that very well. And I think this is just I would say step one, Shirija. I think we are a long way. We are evaluating a lot of things in house, trying to build a lot of underlying tech to enable this entire changeover to AI. But today, I think we are just at maybe 5% of what we really understand of AI, because it's such a difficult subject. It's a subject which needs a lot more consideration. But given what we are at today, I think we have at least started on the journey of AI, using it to the best of our capabilities, and only building more products which will help.
Thanks for that, Trivesh. Such a fascinating conversation between Akshar and Trivesh. Lovely, like really. Both of you have been so candid about your journey, the learning, the expansion plans where you take from here. And both of you, most importantly, have been so appreciative of each other, where you are in your journey and the life cycle of your organization. And that is to brotherhood. And I would like to see more of sisterhood for women entrepreneurs, which is surprisingly and sadly not there. But here's to brotherhood. But last, really, I know the deal is gonna happen between you all, both the podcast. That thing I'm assured of. But I think if the last sound, but you have to give me, Trivesh, one piece of advice you would have for Akshar, or any dispatch who you would have for him as a bro in the fintech community, and similarly for you, Akshar, anything as a meaningful takeaway from this conversation, or anything you would like to tell to Trivesh, what would that be? Yes, Trivesh, first to you and then to Akshar. Yeah.
You put us in a difficult spot, Shirija. There is, I don't think I am equipped enough to give Akshar any advice, or, but obviously, what I know is that what he's building is a phenomenal product which is going to solve a major problem for a lot of people. And I think it is important to, like he said, stay focused on that product and to build more and more, learn as much in that one product segment and then move on to the other. Today, most of the fintechs, including the ones that are in the news today, are in the news because they've just expanded too much without really going deep into one particular space. So I think the level of learning and the requisite level of knowledge that is needed for really building use cases in that one field is primary before jumping between fields. I think that is my 2 cents.
Akshar, what about you to Trivesh? Anything you'd like to tell him? Yeah.
No, I actually am taking back a lot, very honestly. Most importantly, I'm taking back a little more conviction that if your product is right,
Yeah,
you will require less capital and you will still be able to make a profitable business. And customers will come if you have a right product, right? And you've made a good product. So that conviction I'm taking back. Uh,
frugality.
Frugality.
So from I this may be a very wild guess, but Akshar, you're a Gujarati.
Yeah, yeah.
So I am a
With a
Marwadi.
surname like Shah, it's not a very wild guess.
Correct. It's not a wild guess. So Akshar is a Gujarati, I am a Marwadi.
Okay.
And what it is said is that Gujaratis and Marwadis, it is not blood that runs in their veins, it's business. Uh, it is business, and how you can run businesses effectively is what runs in our veins. And I think keeping that in mind, I'm certain that Akshar and his team also is going to crack this piece very quickly. And hopefully, we are also a part of that journey with him.
Love to.
Thanks for that, gentlemen, Trivesh and Akshar. What a lovely conversation. And thank you so much for joining in for this episode of The Hard Thing About Hard Launches. Till the time I see you next, goodbye and good luck. And we mean to have you again for another episode too. Thank you so much. Thank you,
Fantastic.
Trivesh.
Thank you,
Thank you,
Srija.
Akshar. Thank
Thanks,
you.
Rija. Thanks, Akshar. See you. Thanks. Bye
Bye.
bye.